Housing crash begins as U.S. housing market enters 2023 in a massive bubble. The housing market crash nobody thinks possible is here. Home prices will never be the same. If all of this transpires and comes to fruition, similar to 2008 to 2009, equity markets, crypto markets, they will come tumbling down. But in this video, I want to discuss these dramatized, these clickbait headlines as it pertains to housing and how it all has to do with the total market cap of crypto, where we are in this bear market. Currently, you can see down around 74%. The last bear market, crypto market cap as a whole, down 87%. The question as we navigate now, if there is this crazy housing crash, what happens to crypto? Things could get bad. What happens to equity markets? Here's an S&P 500 chart. Things could get bad. Well, I want to break this down for you, though, and I actually want to start with this. This is a clip from Clear Value Tax, and this video, so well put together. I'll put a link in the description. He's talking about all of the real estate clickbait that you're seeing right now, and here's a quick clip.
Morgan Stanley predicts a 10% drop in housing prices from the peak in mid-2022 until early 2024. Therefore, Morgan Stanley is predicting a correction, not a crash.
A correction, not a crash. This is completely different than what happened in 2008, 2009. This is where it all began, September 2008. On Monday, September 15th, Lehman Brothers declared bankruptcy. September 16th, 2008, the Fed announced it was bailing out insurance giant American International Group. These were the headlines back then. Markets were getting ready at that time, and we can just kind of circle it, September 2008, to absolutely crash because of all of these things happening. And the timeline continues, everybody. Going into October, Congress finally passed a bailout bill in early October. The damage was already done. You can see 159,000 jobs lost in the prior month, $240,000 or jobs lost in October. So you see November news coming out, and then you go over to the S&P 500 chart, and you can see October, November, all that happening, markets crashing. This right now is not what's happening in the world. There is a correction in terms of the housing market. And if you actually go over here, kind of scrolling down, this just puts it very simply. The bottom line, the stock market crash of 2008 was a result of defaults on consolidated mortgage-backed securities. Subprime housing loans comprised most MBS. Banks offered these loans to almost everyone, even those who weren't creditworthy. And in this video, you can see he actually referenced this chart. This is the US foreclosure activity. And just look at this. This was the peak of foreclosures back in 2008, 2009. Look at where we are 2021, obviously 2022 not on this chart yet, but what you see happening back here in terms of foreclosures back in 2008, 2009 area is nothing compared to what's happening right now. We're not having that similar type of crisis. There's a correction, a much needed correction in the real estate market. As you just saw in this clip, a 10% correction potentially leading into 2023, mid-2023. But and he discusses this in the video. Here's Graham Stephan with this clickbait title, "For Sale by Owner, 50% off, the biggest housing crash of our generation is coming." So you see these headlines, and you can only imagine if you're just kind of looking at that surface level, and you're just kind of like, man, the same thing's potentially going to happen that happened in 2008, 2009. This is going to be so bad for equity markets. And if you look at this chart, it's the S&P 500. You can see when it reacted to all of that job loss and all of just the defaults, there was the capitulation. And this is likely not going to happen this time around. We've already identified on this S&P 500 chart, and this really does play into the total market capitalization of crypto, and we're going to discuss that in a minute. But we've already dissected this chart, and we've realized a potential target probably around 3,000 on the S&P 500. There is 100% in play, another 20% downside for equity markets for that S&P 500 chart. But if we were to see a similar drop that we saw back here in the housing crisis of 2008 into 2009, we would actually see a fall of around 46%, a total fall of 57% in the S&P 500. This is likely not going to be the case. At least it's not going to be the case off of the back of any type of real estate crisis. So let's just assume, though, that it happened. let's just throw it out the window. Let's assume that the worst possible thing happened, and these headlines, they come true. And we kind of take that 46% dip on the S&P 500 and let's overlap it on the total market cap of crypto from where it is. Let's say that fell another 46% or so. And we're sitting at around $410 billion market cap for crypto. That could be the capitulation for crypto. If you kind of extend this down, the total market cap loss of this year, interestingly enough, would be sitting around 86, 87%. So this is very similar to what happened back here in the last bear market for crypto. So I think whether or not the real estate markets crash the way these clickbait headlines are telling us doesn't matter for this chart. What matters for this chart is the cushion that sits here, whether or not there is a real estate crisis as bad as 2008, 2009, the cushion for a commonplace move for one last capitulation sits there. And it is very much in line with what happened in the last crypto bear market. And it is very much in line with if there was a 20% dip, a more realistic 20% dip for S&P 500 versus a 46% dip. So all of this coming together, and everybody, I really want to put this link in the description for you of this video because there's way more stats that he discusses in this video. And I want to just show you this last thing that he discusses real quick.
Redfin is predicting a similar situation. Falling home prices, however, low inventory will keep home prices propped up. Now let's talk about prediction.
So low inventory, and that's kind of what we're seeing, especially depending on what city across the country that you're looking into. So there's so much more in-depth data that plays into this, but just note the bottom line is 2008, nothing like what is happening right now. And we just went through kind of a similar timeline of what happened back then. So everybody, I think put aside the real estate clickbait headlines. There is a correction. It's playing into the total economic correction that we're seeing as a whole, right? This recession that we're kind of in right now, it's playing into that, but it is absolutely not comparable to 2008, 2009. At least that's my opinion. That's how I see it. And I just really wanted to show you some data on that, as well as offer my opinion on this matter. Let me know your thoughts in the comments below. Hit the subscribe, everybody. I really appreciate you. I'll see you in the next video. God bless.